recently, one of my followers, 77-year-old lady, already retired, asked me whether she should allocate some money to leverage ETFs. And surprisingly, my answer was yes. And I'm pretty sure at the moment you think I'm crazy. How can I recommend leverage ETFs to someone who is 70-something years old and is retired? And what common financial knowledge tells people to do is to put their money in bonds. So before you start hating me in the comments of the section, let me start by sharing some charts and give you the entire context. So this person that I'm talking about, she put all her money 15 years ago in BND. BND is the Vanguard Total Bond Market, which, as you can see here, according to the chart, it hasn't been performing well. So definitely putting your money into bonds, like traditional financial advisors tell you to do, might not be a good option for most people, unless you have fun losing money. Because as you can see here, the price of BND at the moment is at the same level as it was in 2008. Imagine investing in 2008, now we are in 2026, 18 years later, you have the same money that you started with, okay? This is what I call risk. It's not only the risk of losing money, because many people lost money investing in bonds, it's also the risk of missing returns, right? It's the trade-off risk, is the fact that if you have invested in the S&P 500, you will have much better returns. Let me just add here SPY or VOO is even better, lower fees. And if you have invested in VOO, you will have a return over the same period. No, wait, VOO started in 2010. So since 2010, VOO returned 500%, while BND returned minus 10%. So tell me, which one is the riskiest, okay? Even for someone who is retired, right? Of course, now you might be saying, oh, but what about the dividends? BND, these bond ETFs pay dividends. Okay, let me add the dividends, okay? Let me add the dividends, and even adding the dividends, BND during this period, we are talking about 16 years, went up by 40%. Again, you are losing money. You are losing money to inflation. It's 100% assured that you are losing money. While VOO, the S&P 500 ETF, went up 700%, okay? So when it comes to investing, even if you are closer to the retirement age, if you want something really safe, probably SGov will be a better investment. SGov here, I had SGov, and SGov, it only started in 2020, as you can see here, but it's at least, it's a straight line. It has much lower risk. SGov doesn't have volatility because we are talking about short-term government bills, treasury bills, and they pay a dividend every month, if I'm not wrong, or every quarter. It pays like 4 to 5%, and that's it. If you want something that is low risk because you need the cash in the short term, you need to pay your expenses, you need to pay your monthly bills, your rent, I'll go for SGov. I have some SGov, okay? But I'll probably not go for bonds. Because one of the arguments that people used to have in favor of bonds is that bonds were uncorrelated with stocks. They used to be actually inversely correlated. So when stocks would go down, bonds will go up, bonds will go down, stocks will go up. So it used to be good to have some stocks in your portfolio because to balance it, to diversify and rebalance your portfolio a little bit. But that hasn't been the case for the last 20-something years. Just bonds simply underperform. It doesn't matter if stocks go up or down, bonds, they haven't been performing well at all. Okay, but what about the leverage ETFs that I was talking about? So when it comes to leverage ETFs, even for someone who is at the age of retirement, I'll say it's good to allocate a small portion of your portfolio, say 5 or 10% of your portfolio into leverage ETFs. And why is that? Because leverage ETFs can have such an upside that investing 10% only of your portfolio into leverage ETFs, a leverage ETF such as UPRO, which is 3x S&P 500, this investment can potentially double your initial investment. Just allocating 10% for 10 years or 15 years into a 3x leverage ETF like UPRO can double your portfolio. And let me show you what am I talking about. If I add here UPRO, okay, now you can see that while VOO went up close to 600% during this period, UPRO went up 3,500%. So almost 3,600. This means that multiplied your initial investment by 36 times or 37 times, okay? So investing only 10%, okay, 10% of your portfolio, 10% of your initial cash, or 5%, whatever, into UPRO, and multiplying those initial 10% by 37, it will give you, it will multiply, it will have a very big impact in your portfolio return over this period, right? And will probably, this 10% alone will be much larger than the rest of your portfolio that you have invested in VOO or SPY, one of these traditional S&P 500 ETFs, and for sure it would return much more than BND or any bond portfolio. And if you are curious to learn more about the math behind this, I have created an indicator. If you have a TradingView account, you can check my indicator. It's called Kelly Criterion Curve. It's an indicator that I created, and it tells you exactly by how much should you leverage an investment in order to get the optimal returns, okay? Let me just change here the color of my template to dark. Okay. And now, and as you can see here, now my indicator is just gibberish. It doesn't show anything because we have BND in the chart, the bond market, and you should not leverage bonds, of course. But if I change here to SPY, the S&P 500, the story is a little bit different. So let me change here the period to 2,000 days, so it will analyze the last 2,000 days. And what it tells us here is that according to the math, to get the optimal returns in the S&P 500 over the last 2,000 days, you would leverage it by 3.3x, which is in fact pretty close to UPRO, which I just showed you, which is a 3x leverage ETF. If you want to be more conservative, and you should definitely be more conservative, because 3.3 or 3x leverage right before a crash will be a disaster. Please don't do it. You should be more conservative. And to be more conservative, you can use here what we call half Kelly, which is 1.6 leverage. So you can use a mix of cash, you can put some money in SCOV, and 1x leverage and 2x leverage ETFs in order to reach this ratio of 1.6x leverage, so that you have this optimal exposure to the market that will maximize your returns over time, okay? That will maximize the compounding, will maximize the growth of your portfolio. Of course, past a certain leverage is just losing money, okay? So according to my chart here, you can see if it is more than more than 3x leverage, the expected growth line starts declining. So it's never logical to use more than this leverage. But using 1.6x leverage, for example, will give you the optimal returns. What if I put here QQQ, NASDAQ ETF? If I put QQQ, it shows that also a 3x leverage will be the optimal to get the best risk-adjusted returns. Still, half Kelly will tells us here to use around 1.5x leverage, and And let me show you practically how does this look like. So QQQ is the 1x leverage. If I put here QLD, QLD is the 2x leverage S&P 500, and if I put QQQ is a 3x leverage S&P 500. Okay, and I'm going to put here a longer period. Let me expand the chart here. And wow, these results are really, really crazy. So since 2010, so we are talking about 16 years, QQQ, the S&P 500, is up 1,300%. QLD, 8,800%. This is really massive. And Triple Q is up 27,000%. Yes, there is a lot of volatility here, there is lots of ups and downs, but even investing a small percentage of a portfolio will deliver really totally asymmetric outsized returns over the long term. And this is basically why I'm a big fan of using some leverage ETFs, with some caution of course, over a long period of time, even if you are close to the age of retirement. I talk about these and much more, of course, in my community, and I explain people how to take risks and manage risks. I'm not a financial advisor, I'm just a random guy on YouTube, so please don't follow my advice. You should obviously always talk with a financial advisor, but I'm just sharing my knowledge. And in my community, I have over 250 members that have been benefiting a lot from the investor education that I share and from my personal experiences that I share with the community. Anyway, guys, if you enjoyed this video, give it a like and subscribe, and I'll see you in the next one.